Nick Kounis, who is head of macro research at ABN Amro Bank. Welcome to The Pulse. And we've just had that breaking news, Nick, that European financial chiefs will be holding a call to discuss Spain's aid this weekend. What are you expecting for Spain? Do you think there'll be a bailout of the banks, or will there be a larger bailout for Spain as a government?
Well, what we're hearing is that there will be a bailout mainly focused on the banks. The money will be channeled through the government, but perhaps unlike previous bailouts, the conditionality might be more limited. So maybe just some extra conditions focused largely on the banks and not too much extra austerity. That's what we're hearing, but obviously it's quite uncertain.
We're seeing, of course, today quite a major sell-off in stock markets. We're seeing borrowing costs for Spain back on the rise, even though they are down on the week, Nick. Are you expecting this to be enough to calm investor nerves, to give some sort of calm to the markets overall? Or you say, is there more of a master plan needed here? Do we need more from EU President Van Rompuy in terms of the building blocks for the future of the euro as a whole?
I don't think the Spanish bailout will be enough. I think that's only one piece of the jigsaw. I do think we need a wider plan which puts forward far-reaching institutional change, a banking union, a fiscal union, and indeed they are working on such a plan. But questions remain. Will they go far enough? And also, if they do go far enough, will Germany support the plan? And of course, we've had many plans before and also many disappointments. So we remain cautious.
By its very nature, politics takes time to get involved. It takes time for these sorts of fiscal unions to be put in place. In the meantime, a lot of investor hopes rest with the central banks for stimulus coming from the ECB, the US, the UK. We didn't get it. Certainly, it seems Ben Bernanke is trying to dampen the hopes for further quantitative easing. Do you think central banks can do anything? Can monetary policy ease any concerns as well?
Well, I think we're seeing a gradual move towards more monetary stimulus, but all the main central banks are actually constrained in what they can do. I think certainly the ECB is not going to be the answer to this crisis. There's speculation about whether it does another 25 basis points or not. My reaction to that is, really, who cares? I think it really is up to governments. Certainly as long as the ECB does not want to break out of its existing mandate.
Notably, Nick, we did get stimulus coming from China, but nevertheless, stocks fell. Seems to be more concerned about what we're going to be hearing from China in terms of data over the weekend. Can the emerging markets stimulate their way out of this global downturn?
Well, I think China's growth has already, at least in quarter-over-quarter terms, already undershot the government's target. It's maybe below 6% in the second quarter, quarter-over-quarter. So that's why we're seeing a policy reaction. I think they can do enough to arrest the decline, to keep the economy on a soft landing trajectory in the 7 to 8% kind of region. But certainly they don't have the kind of freedom they did in 2009 to really get the economy powering back to double digits. So in that sense, we shouldn't expect too much globally coming from the emerging markets.
So suppressed global growth in general, Nick. Where then, particularly if you're a fixed income investor, should you be putting your money? Are we going to see German bond yields? They're falling today, down by some 6 basis points. Can the yields go even further? Should we stick to the havens?
Well, sure. I mean, certainly as the crisis escalates, fear is the name of the game. You see a rush towards Germany in particular, but also the rest of the European core, and I think that trend can have further to go. Certainly, if we don't see the kind of big reaction from Europe that everyone is hoping for.
Nick Kounis, head of macro research at ABN Amro Bank. Thank you very much for your time today.